Good morning to you tuned into Smart 24 TV. I'm reporting to you live from Nakawa Business Park, and we're here at the Uganda Securities Exchange. What you just witnessed is Bank of Uganda bonus issuance shares. Of course, for every existing shareholder that had one share, that means they're going to get 5 more shares. Their share portfolio, of course, has increased from 25 billion to 150 billion Ugandan shillings. This means a lot, of course, for the Uganda Security Exchange in terms of liquidity on the market. And we're here with Mr. Paul Bwiso, the CEO of the Uganda Security Exchange, to give us an in-depth analysis of what this means for the stock exchange and the market, and what Ugandans should anticipate from that, especially for the companies that are also enlisted on their stock exchange. Good morning, and thank you for the pleasure of your time.
Yes, good morning to you, and thank you for joining us here today. And today we are hosting Bank of Baroda, who listed 12.5 billion bonus shares. These are additional shares to enable them raise capital. That's 125 billion Uganda shillings extra to the 25 billion capitalization they had, to be able to meet the 150 billion capital requirement that Bank of Uganda put in place, and gave a deadline that by 15th of June, all banks should be capitalized within the requirements of the law. Now, on the market, as you've rightly mentioned, investors are getting 5 shares for every one held, and what that means is that we have an extra 12.5 billion shares on the market, and that has created liquidity, or should create liquidity, and investors on the market are able to sell those if they need to cash in, because as everybody knows, or if those who don't, a bonus issuance is a capitalization of retained earnings, so indirectly the company has paid shareholders a return. So if they do sell that off, they're able to make some money off their bonus shares. In terms of the market, liquidity increases as a result of more shares available in the market, but also the price discovery results in a reaction to the bonus issuance, which is a material event, and what that will result in is more trading on the exchange. And I must say that Bank of Baroda has also proposed a dividend of 2 shillings in addition for every share held for the year ended 2022, and I think we're told that this was approved by the central bank. And what that means is that there's an opportunity for investors to make a return in both dividends and capital gains of this transaction.
Okay, what does this mean, of course, as a central place for the trading securities licensed by brokers and other dealers? What does this mean for any viewer watching who would want to, increase their investment portfolio, or who is enlisted under USE? What should this mean for them?
So, being in the market has 2 key benefits: capital gains. And capital gains is where if you buy today a share at, say, 10 shillings and the price rises to 15, the difference is the capital gain. So you've actually realized more money based on the gain in pricing. The second is a dividend yield. If a company pays a dividend, and then that is a return on investment. So if you're holding 10 shares, holding a share worth 10 shillings and they pay a dividend per share of 2 shillings, that gives you a return of, I would say, 20%, because the 2 out of 20 gives you the return on your investment. So what this means for an investor out there is that there's an opportunity to invest and make a return, an opportunity to save and get a return in the future. Bank of Baroda has been considered as one of those companies that on the exchange that consistently pays dividends, and on top of that, it performs well. It keeps a lot of its retained earnings, but has a good asset base, is managed well in terms of corporate governance. And we've seen it grow from the point of listing in 2000 to date significantly. This is the second bonus issuance it's had, and it had sufficient retained earnings at the point of this issuance of over 500 billion. So the impact on its balance sheet has been minimal. But it's rewarded investors with a return. So investors out there can take advantage of this opportunity and come and buy some of the extra shares that have been issued, because some of the investors on the market will be interested in selling out to get some of these returns, and it will give the new investors an opportunity to earn a dividend, but also to benefit from any capital gains that may arise.
Okay, you speak of dividend, and that brings me to my other question. Recently, MTN started rolling out the payment of its dividend. We saw it awarded, it gave NSSF about 31.5 billion Ugandan shillings. What does that mean, or what should that mean for companies that have not yet rolled out their dividend payment as a Uganda Security Exchange?
So for us, we look at the market from one perspective, liquidity and the ability of companies to reward investors. As mentioned, if you pay a dividend, then you're more attractive to investors. So your stock is able to trade a lot more on the market. Now, the ability of companies such as Umeme paying a dividend, we saw its stock price rise from about 240 shillings to about 440 shillings as a result of the 63 shilling dividend I take that they are going to pay out. We've seen the stock price of Stanbic increase with the, I think it's 3.6 shillings dividend that they're paying out to investors who will be on the register at end of this month or early July. We saw the price move from about 2021 to about 25. We've seen a return on the dividend being paid by MTN, the final dividend, and all the others, BAT Uganda, among others. So it's a testament that most of the companies this time around have made some money and have declared a dividend. I think I saw CIPLA's results recently. They proposed a dividend. I think NIC have also proposed a dividend. So among others, what this means is that there's a rebound in the economy. Companies are making more money despite all the other economic challenges, and that means they're able to reward shareholders, which means it will create liquidity because investors are always chasing return. Now, many have been in the fixed income market segment, both money markets and the collective investment schemes and the fixed deposits alongside the government bonds. But now there's opportunity in the equities. And equities, if they are run well, give an opportunity for investors to earn well in terms of both capital gains and dividends.
When you speak of the market, and I would like to maybe persist say that some of the questions that have been arose are the trend of macroeconomic, situations that have impacted on the market. But I would like to know, Mr. Buiso, what usually impacts the performance of the market on the stock exchange for all companies, apart from macroeconomic, situations that people usually use as reasons?
The key factors are good performing companies that declare dividends. As a testament, we saw Umeme, good performance, high dividend payment out, price reacting. And price reacting by over 200 shillings, almost 100% over the period of, I would say, the last 6 months. So dividends and good performing companies, well, there are good performing companies that might not declare dividends. Now, the reaction on the market and the activity is boosted by the dividends and the declaration. We've seen turnover on the exchange more than double from last year. I think we stand at just under 40 billion Uganda shillings. But compared to this time last year with the COVID impact, we had only traded about 20 billion, so more than double. What that means is that there is an impact on results of the companies. If the companies are performing well, businesses are performing well, dividends are paid, the stock market performs well.
Okay, lastly, and as we wind up, I would like to refer to one of the participants that said we should benchmark from other stock exchange markets like Johannesburg, London, and Nairobi. What is your take on that?
Well, it's something we do follow. A lot of our rules and regulations we benchmark from Nairobi, Johannesburg. There are also international standards that we follow. So we look out at all the best performing markets, especially in Africa, Nairobi, Nigeria, South Africa, Tanzania, and those help us guide. And we always have collaborations and interactions where we're able to discuss new developments, new ideas, the environment they are dealing with, and how to provide a more efficient market. As mentioned, we've provided solutions now for technology. On the exchange now, if you go to *165 *6 *6#, you can open an account to trade on the exchange. You can buy and sell shares. You can view your holdings. So as a market, we've provided a lot more solutions to investors to be able to participate in the market. If you go to the websites of these companies, and if you also attend the AGMs, which are also on YouTube, the videos are available, you can see how they're performing and make an informed decision by reaching out to your stockbroker on whether to buy a stock or not.
Thank you so much, Mr. Paul Bwiso. I appreciate your time and expertise to speak to us today morning on Smart 24 TV and Smart Means Business. Where there you have it, the biggest, boost they can boost up is that there's going to be more liquidity on the market since the shares, of course, have increased with the bonus shares that Bank of Baroda, I beg your pardon, has just, issued.